well, at least morning here on the West Coast where I'm at in California. Dr. K, are you with us from London? Are you back from
Yeah, it's
Moscow yet?
almost at the evening point, 5:45 p.m. Back from Moscow.
For you, that's like mid-morning.
Yes.
In any case, I want to welcome everybody to today's webinar, Intraday. Now, yeah, we're not quite there. We were trying to time this week's webinar to coincide with the market reversing as the NASDAQ goes up into the 2600 level, which is resistance in the near term. You can see you got two lows here. When you busted that, you didn't even hold that support, really. You might say you held it on this day here, and that was the effects of some of the support down here. But once you went through that level, you broke hard. And, of course, the last couple almost, let's see, well, pushing on like 3.5 weeks, you've been in this really choppy phase. You know, this was an obvious rally to short into, and you got a nice break if you were hitting them right along here. Now, here we have this rally. You're up in the 2600 level, starting to come in. My bar is red because the NASDAQ is now lower than where it gapped up. So it's kind of a thing that I put with these charts where I use a color coding to get a bar chart to do some of the things that a candlestick chart will do. So a candlestick chart will actually show you a down candle if you open higher than where the last trade was. So I like to show that here. So you can see today the red bar is telling you that we've come off the opening levels and obviously the highs of the day on the NASDAQ, hitting support at the 2600 levels. Now if you think about it, action, reaction. So there's your Livermore principle at work here. You've retraced half of the move down. So this is a logical area for the market to find resistance. And of course, we did put out a market direction model notice earlier this morning, letting everyone know that you could take profits if you bought the buy signal in here and got a nice pop there. You could take profits here. We're actually testing the skews, so the SQQQ here right now. And we'll see if the market's able to get back over the 2611 high of the day. That's what we're using as a short-term stop. So we're trying to finesse this on the trading side. We don't have a sell signal technically in the model yet. So where we're exercising discretion is in the way we manage money. So everyone can hear me okay, right? Good. Just want to make sure. You guys are kind of quiet out there. Usually by this time I got like 5,000 questions, but maybe everybody's just kind of dealing with the end of summer and their brain is on hibernate. So anyways, so that's basically what you got going on right here. So you're going to test the short side here maybe on some of these stocks. That's a possibility. I'll give you some names I've been playing with. Decker's, running into the 50-day here. It's reversing now. It's up a few cents, I believe, right now. 58 cents. It might way up off the highs. That could reverse here on this late-stage breakout. Another one that looks kind of interesting here is Brax. Pushing up into the 200-day here. Logical resistance at this low here and this high. So you got a resistance zone right in here. It's kind of reversing. So any of these could be tested on the short side using the high of the day as a stop. So, and as the market's moving up, you are in a logical position in the indexes to find resistance, as you see in the NASDAQ. Let's take a look at the S&P real quick. That's not the S&P. Where did that guy come from? Well, let's just do this. S&P maybe has resistance in here, but it's kind of stopping up in this level here. You're kind of in no man's land, but you are retracing 50% of the down move. So similar to the NASDAQ, so a logical area for the market to run into trouble. Whether it actually reverses hard off of these levels or not is another question altogether. And we'll get an idea maybe at the end of the day, maybe not. Keep in mind today's the last day of the month, also the last day. No, not the last day of the quarter. That'd be end of September. So it's the last day of the month. You might get some window dressing. But to me, it almost seems like some month-end profit-taking as well. So some stocks were up quite a bit more earlier in the day, and I was laying out shorts, and they're pushing against me, and I was down a good 3-4% at one point. Now I'm basically flat and turning into the green on the day as these shorts start to roll over. So, logical place to try and go short Whether it will succeed or not remains to be seen over the next day or two. But this would be a great spot for the market to roll over. And we're thinking that there's a possibility of that. So some other names that are rolling into resistance. See VMware pushing right into the 50-day. You can think about testing that. AGCO, same situation there. These could be premature too. In other words, they could be a day or two early, so they might work around the moving averages. If you remember, the last time we saw this happen, so for example, let's take Brax, it took a couple, 3 days around the 200-day moving average before things started to break to the downside. Now, maybe it's a little bit too obvious this time, and it takes longer, so that's a possibility here, but I think it's all going to depend on what the general market does. But you can see that that situation is similar to what happened earlier in August, and that worked pretty well. So you see whether it works right here. So jury's still out. Agrium, same thing, 200-day resistance. So you can see what's going on here. You have the Nasdaq Composite running into resistance at the 2600 level, and we relied mostly on the Nasdaq Composite, and it's coinciding with a number of stocks running into logical resistance. Now, so this is kind of where it's all sort of coalescing, and we'll see if this actually results in a pullback. So we could also just be in a choppy phase, or we could continue in a rally where QE continues to be a factor in some way. You can see the market tried to sell off earlier, now trying to push higher as the volatility intraday continues. Dr. K, any comments on that?
You mean, in terms of, there's a couple of fertilizers
general market.
There. Sorry, what's that?
The general market and QE.
General market, this is a typical bounce. We're in the chop zone here. So as far as QE, it may be behaving in a way that is helping the markets higher. A stealth QE 3. That said, I would just continue to monitor the markets. Expect continued volatility because we are in the midst of a chop zone. So that's why we sent the report out to members earlier today that they might want to take partial profits here. Other than that, the model is on a buy signal. So this buy signal right now looks like it's going to continue to stay on a buy, but we'll know closer to close, since we might also get some artificial end-of-month window dressing that props stocks. And if we see some evidence of that, that might be cause in and of itself for the model to switch to a cash position.
Okay, so basically we'll see what happens today and see over the next day or two if this runs out of steam here and rolls over, if it does so by the end of the day. Meanwhile, you got some names you can play with on the short side. I'll give you a couple more here that I'm looking at or keeping my eye on. Mosaic is another one. We looked at AGU, it's right at the 200-day. I think I look at Praxair here, right back up at its 200-day, see if that's resistance. Under Armour, just above the 50-day. You look at these steep V-type moves, and a lot of these went further than I would have thought. I would have thought this would have stayed weak and stayed below this area of overhead supply, for example, on the 200-day moving average, but it doesn't. It just keeps going. So I think Dr. K is right when he says there's always a potential that QE is at work right now as we speak. Bernanke hinted in Jackson Hole on Friday that they had many tools at their disposal, and some that they would announce and some that they really didn't have to announce. So who knows what's going on behind the scenes. And, of course, I know some of you, a handful of you, have expressed some frustration that the markets seem manipulated and whatnot. And, I think to some extent they always are by big money coming in and out. But, yeah, maybe so more, or maybe more so these days because of what we're seeing with the Fed having to maintain liquidity. And now there's, of course, some hints of outright QE because supposedly there are some Fed board members who have been pushing for even more stimulus, monetary stimulus, to shore up the economy. But we know it doesn't work. So, it's kind of questionable where that's going to take stocks as I see it. However, I think gold and silver, it's still got to be positive. The money printing is going to continue. So, gold might be in a corrective phase where it goes sideways, but our view is it's still long-term going higher. And, of course, that will take silver along with it. Silver's kind of in this choppy pattern. Notice how in this last sell-off last week you have less selling volume. So a lot of this may be working off some of this overhead, and you see it come in, slam, slam, and when they raise margin requirements on gold on the CME, that's going to take down silver as well. And there is probably some skittish money that was late coming into the move here, and so will sell out very quickly. So silver could just be working back and forth, and eventually you'll wash out enough weak hands where it begins to go higher. So we're long both silver and gold right now, AGQ and DGP. Bought on the pullback. We're just sitting. Now we expect that we may have to sit through a pullback. Dr. K, do you have any comments on silver and gold and how you anticipate handling any position one might have in the two metals?
Yeah, if you pull up GLD, you'll notice on GLD that every time it has a sharp sell-off, it tends to base for a while, for a number of weeks. I'd like to make two observations are that, first of all, it tends to retest those lows, but never undercuts those lows by very much, maybe a couple percentage points. And the second thing is that the basing period tends to be out to several weeks or longer. Now this time, it's very possible, first of all, if gold GLD retests those lows, I would be a buyer. I would definitely be stepping in and buying, adding to my position in gold ETFs, since GLD tends to gain support and a lot of buying near those lows. Now it might not even get there. The second thing is the basing period may not be out to several weeks. We might see gold make a run for old highs and then form maybe a little handle and then move up from there. And then I would be a buyer in that case as well.
How about silver?
Yeah, silver, I'm holding silver and I'm waiting for it to prove itself on a price basis. So it really has to clear that high at about 42 and change, and then I'm going to add to my position once it can prove itself there.
Right.
And then I will continue to add to the position if it goes on another run like it did earlier this year.
Now, well, here let me play a little bit of tit for tat here. Okay, you say you want it to break out through this peak and you're buying it again, but of course last time we were buying on this breakout through this peak and it ran in very sharply. Do you think if that happens again, particularly if you get this kind of a wedging rally or a low volume rally like you had here and then a breakout, you think you're just setting yourself up for the same thing?
Yeah, the first time I bought, I'm still holding that position, and that the idea is that silver is volatile and sloppy, and I want to anchor myself into the ETF. So I took that first position without any kind of regret. I never had any thoughts about selling it because silver really never did anything particularly wrong. And so if it were to have a poor pattern up through say 43, I probably would hold off adding to my position at that level. Essentially, I'm looking for silver accumulation in silver at the 43 level or higher. So that really would be my buy point, is to see proper price volume action in the metal.
Okay, so let's say somebody didn't have a position at all in silver. Where would you be looking to buy then, to enter? On this breakout through this point here?
Well, if I didn't own any silver right now, I probably would have bought. I would be buying on. I would have bought a few days ago on that sharp pullback.
On this pullback, that's
yeah.
Okay.
I just want to anchor. In fact, I might even just buy. These are small positions that are meant to be pyramided. So I might buy, say, a 10% position today just to anchor myself in, and then my second position. The idea is that when it crosses above that prior peak of 42 and change, it's going to cross with a lot of volume. If I don't see a lot of volume, then I probably would hold off on adding to my position until I saw more evidence of accumulation.
okay. So that's a situation with silver and gold as we see it right now. So let's see. Get back.
If gold retraces back closer to the prior low, and I don't know if we're going to have that beautiful luxury where if it gets under say 170, I might start picking up some more gold.
I see. Okay, so that's the story with silver and gold. Let's go through some of these other stocks that we're looking at. Everybody's always, whenever there's a pocket pivot of one sort or another, we get a lot of emails. This meets the technical definition of a pocket pivot. The only thing here is a little bit V-shaped, and the base has been very choppy, so you've got probably some overhead supply at play here up in this area. So, Dr. K, what's your take on this one?
Yeah, it's not constructive price volume action overall in the weeks leading up to that pocket pivot. So that means if you're taking a position, expect a lot of volatility, and I don't like volatility. That means risk. So I want to wait for the basing pattern to work out its defects, and then buy on the next pocket pivot, wherever that might be. Now, the stock might go up to 65 from here, and then form some sort of constructive handle, which is perfectly fine. I'm more willing to buy into that kind of formation at a higher price, just simply because I want to have my money in positions that are high probability events of going higher. Putting my money into this kind of pocket pivot is much more of a 50-50 proposition, so it doesn't make me feel comfortable, and I want to be playing from a position of psychological strength whenever I have my money on the line.
Yeah, there were a couple of pocket pivots the other day that we didn't put on, and these are the same kind of situation. What was that other one that people were, iSurge. You know, it's kind of working, but it's still very V-shaped. The movement's very V-shaped, and they coincide with this market rallying up into 2,600 on the NASDAQ. Yeah, we're less, positive on those. And the JVA, I know, is a heater. You know, this stock starts moving, you can catch a good 10-15% move in it. And we told you yesterday that you probably want to take some profits if you did buy it on Monday when we put out the pocket pivot alert when the stock is not even trading above the 50-day moving average yet. But when that thing starts to heat up, our experience having studied the chart is that it can get going. So you had a nice trade there. It's nice to get a trade, 10% trade in something in a market like this. But that worked a little bit better. Still, though, you could argue, it's a little V-shaped coming straight up off so sharply. But we know how this thing acts. Also, it was a rocket stock type maneuver. Just barely missed being shortable on that basis, right, Dr. K?
Right. Yeah, it was very close to being shortable there, but because it is very close to being a rocket stock, the pattern that it's tracing out is very similar to post topping formations in rocket stocks, which mean that when I saw yesterday's action, 2 days of strength to the upside, of sizable strength with great price appreciation, your odds are considerably less that it's going to just keep going higher.
Sounds like we lost Dr. K. He faded away.
Can you hear me? Can you hear me?
Yeah, now I can see it. Yeah, you said your odds are considerably lower after a stock has been a rocket stock and broken down, correct?
Well, yeah. We had 2 good days, 2 very good days of price appreciation. So after you see that kind of a bounce, your odds are considerably less that the stock is going to keep going higher.
So there you have it, a trade. That's basically all it was. So, and we didn't want to pepper you with a bunch of other pocket pivots because you're in a risky area, you're in a volatile market, you're in the chop zone, as we call it. We just wrote a Market Watch article. Should be coming out in the next couple of days. They're not as timely as we'd like them to be, but we think you're in the chop zone at least for a while, and your risk is actually to the downside potentially from here, as I see it. And so that's how I'm playing it. Anyways, moving along to some other stocks. We talked about MCP. Hands, that thing broke out, so it's pulled back to the breakout point. But it just illustrates the risk in going long in this market. So we're not really big on going long, but yeah, if you really just have to buy something, you can buy this. But kind of a deep formation here, a little bit jagged coming after a long run. So $84. You shouldn't have been buying it up here. This is where to be buying it within range of the breakout point. So. if it's pulled back, you're probably down about 3, 4, maybe 5%. So you have to decide what you're going to do if you're going to sit with it. For my money, I don't really care for that kind of action. Hey, Dr. K, let me throw something by you. If you had bought Hansen's, let's say on this day right here, on this pocket, on this pullback that held the 10-day movement, let's say you bought it here, you bought it at 84 bucks. What would you be doing with it right now?
I'd be sitting on it. I have, to me, it hasn't done anything particularly wrong, and I'd be sitting on the full position because, well, it certainly wouldn't have hit my sell stop yet. Now, if tomorrow, say it goes below the low of today, I would be selling it, and I would probably have a, I don't know, 3 or 4% loss in the position. But I think there's a lot of this stock has bucked the trend completely. I mean, it's really been resilient in this 2011 market. I don't mean just recently. I mean just since 2011 began, the market's really gone nowhere, sideways and sloppy, and then lower. And Hands has bucked that trend. So I think there's a lot of potential in this stock. So I would be sitting with my position right here.
I don't know.
Yeah, keep your stops on the low of today, because if it breaks the low of today, tomorrow, or next day, then I would definitely be selling it. I don't want it to. It would be going back into its base at that point.
I'd have to say if I had bought it at 84 yesterday, I'd probably take this personally and just unload the stock. I don't know. This thing could end up failing as well. It strikes me as just a little bit flaky. I know they make the Monster drink. We talked about that last week. But what are these energy drinks, anyways? Isn't that what we just used to call coffee back in the old days?
Yeah, it's a big fad in Europe. In the U.S., it's a huge thing. I mean, it's amazing how all the different restaurants and venues and clubs, they're really into these energy drinks. You see them all over the place because people love to combine them with alcohol, with like vodka. Vodka Red Bull is very common, but now it's vodka
like trouble.
With all these other Hands types of energy drinks. I think is a big thing. And it's just sweeping, I'd say it's definitely sweeping the UK and Europe, and I'm sure it's sweeping the US as well.
Well, okay, so we have differing views on how we might handle it, so decide who you agree with if you own Hansen's here. My view is if something's got some momentum, it should start working, it should keep working. In this market, things are volatile, and I understand you get shaken out, but I'm tending to think that the short side is going to come into play here. That's not to say I would be shorting Hansen's here. If it failed through the 50-day moving average here in the breakout and then rallied back up into the moving average, I might be shorting it in there. And that's probably the only conditions under which I would be shorting the stock, and I would not be shorting Dollar General on the same basis. I think someone was asking about that. You don't really want to be shorting stocks in that position. You want to be shorting stocks that are weak, and I'm kind of picking on some of the stocks that aren't major, big institutional type things. I think Rax is not that well loved. It's kind of in a weak pattern. Could be a right shoulder, So I'm looking at things like that to short into. Aruba looks kind of interesting. It's kind of rallied up in here. It's into this area of resistance from over here, and so it could roll over here too. Or they could just, some of these could just go sideways and then move higher on you. So you're kind of testing them on the way up. And this is really the only reference point. So let's see some other questions I want to go through.
I was going to say one more thing about Hands. Now, there's no news on why it's down so much today on appreciable volume, and there might very well be a news item that comes out before the close. So I would watch for that. I have been looking for news on why Hands is down as much as it is today.
Okay.
It's definitely an aberration of the pattern. So, there might be something material out there. It could be. It could also be rumor-based, which is less than material. So yeah, watch for that.
Okay. Let's see. We're going to go through some questions here. Somebody's asking, would you see the last few days volume and action in SLV as wedging? Yes. It's rising, and the volume's getting lighter and lighter. So, like we were saying, it may take some more time to just move back and forth. But you notice, higher low, higher high, higher low. That's the pattern. So, you might continue a little higher and then pull back again. We'd watch for another higher low would be a strong thing to see. But it could just pull back to the 50-day and bounce off support. But as we see it, okay, gold and silver are going higher longer term. So it's really a matter of picking your spots if you like to buy on weakness. And if you like Dr. K, you can buy on strength and pick your spots there. So, but we think longer term, you just let the pattern continue to develop out. It's going to go higher. So, here's another one. Won't ISM and NFP help show the market's hand in the next couple of days if we turn down and possibly grind up if those numbers don't disappoint? Didn't the Wisconsin number come out earlier? And markets tried to rally on that, I think. So I don't know. Do we really even pay attention to news, Dr. K?
I only pay attention in terms of what the market, how the market reacts to the news. I don't care about the news item itself. If the news item is very negative and the market rallies, that's a sign of strength, and vice versa. So that I pay attention only in terms of the context of how the market responds.
Right. So today you had what was the number here? Chicago PMI came out earlier, and that was a little higher than expected. The ADP jobs number was 91,000. Some economists were modeling for 100,000, whatever that means. And the market, rallies, but it was already gapping up this morning on news about Europe. So the bottom line is, if you put all the news within the context of what the market's doing, which is what we watch, we're not sitting here going, well, if China starts dating Russia and Vietnam has some nukes that they start building that they bought from Iran, and it's Britain merges into France and all this other stuff. What does the market do? To me, that's kind of mental masturbation, and you can think about it to some extent, in terms of understanding the context of the market. But to try and ascribe a cause and effect by analyzing the news doesn't really work for us. You just have to watch the market. So in the context of all this news, okay, and we had some good news today, I guess, with the ISM, Chicago PMI. The ADP jobs number wasn't a disaster. But you're at resistance here, potentially at the 2,600 level on the NASDAQ. So it would be a logical point for the market to roll over. So from this perspective, 50% retracement into resistance. Whatever the news is, if the market breaks down through here, it's just doing what seems logical given the position of the indexes here. So no need to really worry about. Go ahead, Dr. K.
I would go and even say that the news can often derail one because the perception might be a particular news item is negative for the market and the market rallies, when in reality it's actually a very positive item. It's just on a deeper level it's positive. So news can often trip one up. And I go back to what I used to say. It's better to just not follow the news altogether and just focus on the price volume action of what the leaders and indices are telling you to do. And that said, I like watching certain news items as they come across and seeing how the market responds. I think it gives me a slight edge as opposed to not looking at the news at all. But I wouldn't be surprised. When I do a lot of my studies, I'm looking at price volume action. I don't know what the news of the day was, say, in 1978, that caused a certain spike or follow through day in the market average, and I don't need to know. It's irrelevant. It's absolutely irrelevant. So, back in the days at O'Neill, I didn't have news. I didn't have access to. I didn't want access to news sources. I remember they said we can bring a TV in here, and I declined. Because everything was going very well. And I guess, it'd be nice to not have connection to the internet, to all these news sources, just to go back to that very clean room environment.
So that's our analysis on whatever news that question was referring to. But, let's look at some of the big stocks here. Okay. Apple. Apple, interestingly, Apple came down and tested the 50-day moving average, actually traded below it, down around 355, and these lows after hours when Steve Jobs announced his resignation last week. And so it's interesting to see the move in here in the stock. I didn't really care for this gap, though. I thought that was a little bit cheesy on light volume. in the stock, and so I had some shares. I bought them here. I sold them into that because I didn't really care for that kind of gap up. It looks funny, and I think you can see this is kind of narrow, but look, I could make it spread out, so maybe it looks more constructive there. Scaling is everything, right? But you can see that you have this double bottom, but the second bottom doesn't undercut this bottom, so as a short double bottom formation, it's going to work. Maybe, maybe not. I don't know. Maybe the stock continues basing. Apple could hold up while the rest of the market dives. So bottom line is, I think it needs more time to base. I don't think it's a short. It could turn out to be a short, but I think if you're going to short the market, there are probably other targets that are less of a headache in terms of getting an institutional bid and institutional support coming into the stock at any point. Baidu, the Chinese internets have been trying to come up off these double bottoms. They're kind of all doing that. Sina, got past 50-day moving average, but sometimes what they can do is go past the 50-day moving average and then above a prior peak. So in here, this potentially becomes shortable using the high of the day as a stop. This is a risky one because these things are volatile, and I can tell you, yesterday I was shorting this thing coming up into here the last couple of days, and it was starting to work on Monday, and then yesterday came down and hit the 200-day moving average. It looked like I was going to score pretty good on that one, and then I had to turn around and cover very quickly around 98, 99 because I just feel that this thing was pushing against me very fast. Now, I wanted to turn around and go long the thing at that point, actually, but we had an intraday day trading margin rule that where it would mess up my day trading buying power if I came back and went long the stock after being shorted. Thank you, J.P. Morgan. But anyways, and that would have worked out for a good trade. So, and sometimes I'll do that if I short something and it just seems too strong. I did that with Aruba after earnings. I thought it might stall out at around the 20 level or so, and it kept going, and then I just went long the thing. Ran up for me a bit. And today I can turn around and go short. So sometimes you can day trade. Since I'm already in that mode on the short side, because I will day trade more on the short side, pretty much. In fact, that's what I seek to do a lot of the time, particularly using day trading buying power. But what I'm trying to do is just kind of pick off these moves. So if they're showing me short-term strength, and it looks like they might run up another 3, 4, 5%, sometimes I'll just turn around and go long a position and day trade it. Let's see. Tiffany is another stock people ask me. You can see the market Dow's up 86, NASDAQ up 13. Coming in again. Tiffany's gets above the 65-day, and it's doing the same thing. It's just drifting past, and that's what they'll do a lot of times. So does it become shortable? Well, you could come in and test any of these. Any of these things that are doing these wedging rallies up into an area or getting close to a moving average on either side, you can always test them. Just put out a small position and then use the high of the day just to blow out quickly by the end of the day. And then what happens is, like a day like today, you'll get really heavy short and everything will flip over for you, and then you'll be up pretty sharply. That's usually how I try to work it. It doesn't work perfectly every time, but it is usually how I start out making money on the short side when the market breaks. It usually rolls off a peak, and that's where I'm coming in. AG, people asked about miners. Dr. K, wasn't there a question that came in about the ratio of miners to gold or something like that?
Yeah, actually, there was a question specifically about the ratio of the price, ratio of the price in miners to the price of gold, and essentially, with gold's recent run-up, the GDX, which is the gold mining ETF, the GDX to gold ratio is unusually low. So it comes as no surprise that the miners are showing accumulation overall. And interestingly, if you look at the small mining ETF, which is GDXJ, it's lagging the GDX, and that's most likely due to the fear factor. Small miners carry more operational risk than large miners, and with the current crisis and confidence, GDX right now is more attractive than GDXJ.
Would you rather just own gold, though?
I would rather own gold. I think gold has a lot more upside potential than the miners, but if you want to be diversified, there's nothing wrong with buying, buying the miners, mining stocks. I think AUY is one of them that seems to be leading the pack. It's low priced, but keep in mind market capitalization is more important than price, and this is a $12 billion company that trades an average of 12 million shares a day, so it is very much a big cap stock. And I see nothing wrong with, if you're going to play the gold trend, there's nothing wrong with owning something like AUY or GDX.
I like AG myself. Silver miner, First Majestic Silver, big earnings growth, 142% in the last quarter, 2,200% before that. So I've liked this one for a while. It was a hot IPO. So this is one of my favorites. You can look at the pattern here. Let's came public. I think it broke out somewhere down in here. It's probably a pocket pivot in there somewhere, right, Dr. K? And then it comes out, has a sharp run out. No, this has been around for a while. My mistake.
But yeah, I did actually have a pocket pivot on February 18th.
Now, Dr. K, on one chart, I'm showing AG doesn't start trading until December 15th, 2010, so it looks like an IPO. And then on this chart, it's actually showing price action going on. Did they switch exchanges? Is that what happened? I'm sure we'll get some answers.
Be. Yeah, we can probably pull up the news item to find out what happened on the 15th.
I think that's what happened. But in any case, you had a sharp run up. And
they did actually have a pocket pivot on February 18th, 2011 of this year.
Yeah.
Which was completely viable, and then it had a nice run.
Right there. So yeah, that was viable, and it did have nice. You have to sit through this pullback though. You would do that though, right? You'd be able to do that.
Well, keep in mind for these silver and gold types of names, you have to be a little more forgiving with their volatility. And what's nice is that if you had bought on the 18th of February, it never comes back to your buy point. I mean, on that sharp pullback, it doesn't even
right. If you bought here, it never got below that point. So if you can sit through all that, you catch just a move. So that's why.
And you also look at silver as kind of your guide. Silver had a pullback there. Silver had a big run up, and then it had that pullback, but it was a constructed pullback, and then it started going higher again.
Now on AG, a couple things. This is a cup of the handle. I think you get some supporting action along the lows, but it wouldn't surprise me to see the cup of the handle form another cup of the handle for a handle. So I'd watch this. But again, we like the metals themselves, and particularly gold, and then SLV after that. So you can try and play miners, but they're much more difficult. But I think, Dr. K, you had some insightful comments there on that. Somebody asking, do we follow weekly charts for the big view trend? Yes. Dr. K, what would trigger a cash signal for the model?
It's good to switch between the daily and the weekly chart. I do that routinely with every stock that I look at. So what was the question?
What would trigger a cash signal on the model?
Well, there's a couple possible scenarios. I mean, we're looking at a weak bounce in the indices and leading stocks. That would push the model into a cash signal. We also are looking at if, for instance, the end-of-month window dressing kicks in toward the close. That might be readily apparent, and the model might elect to take profits at that point and switch to cash.
All right, some people asking us about MasterCard. It's kind of a choppy pattern. On the weekly chart it looks a little bit better, but still, you could argue, this is kind of weird action, a lot of volatility. Dr. K, would those be railroad tracks in your view?
No, railroad tracks happen after a nice run-up, and MasterCard really hasn't
so you haven't had it yet. But I don't really care for this wide, loose action in here. It's a little bit of a function of the market. I guess it's trying to buck it. But, I'm not in the mood to go long anything right here, personally. So if you ask me about any stocks on the long side, I'll say no, I'm short. And some of these things, look at RATs coming off the 200-day moving average. Starting in reverse. We'll see how this pans out. But my view is you want to short it, hit it at the 200-day. And that's my view of stocks in general. So if you're asking me, what about this stock, what about that stock, I'm not in the mood to own stocks. Are you, Dr. K?
Not particularly, no. I'm sticking with my gold and my silver.
So, Okay, LVS, another one. Climax top over here, back in October, November, I think it was November last year. And it's just been in this big, choppy, sloppy base, and here you're at a peak here. I don't know, is this resistance? I don't know, is it heading lower? I like other stocks, probably weaker. But if you like to bet into this and think it's going to reverse and break through the lows down here, I guess you could short it using the high of the day. You can short or go long anything, as long as you have a quick stop. We get questions about Arco. I actually use their gas stations. Oh, not the same company, sorry. Arcos Dorados, I like it. Now, they're actually the largest franchisor, I think, of McDonald's outside the U.S., right? And also in Latin America. So,
That's right.
I don't know. I'm Mexican-American. I don't really see Latin Americans getting into McDonald's. They're going to have to come up with, fish tacos instead of filet of fish, I guess. But I don't know. Maybe it works. But they got decent earnings, but it's going up because McDonald's is going up, I think. And in this environment, maybe there's potential for McDonald's if it's cheap food. But Latin American countries, you can live off of beans and tortillas, and I know Mexicans are very good at doing that. There's the old Steinbeck story of the two kids, the Mexican kids living in the village, and they go to school, and their mother gives them beans and tortillas for lunch every day, and so the white liberals in town are concerned that they're not eating properly, and these kids were healthy. This could be, and Steinbeck tells a story that these white liberals start feeding them, good food, and because they're concerned that they're just eating beans and tortillas, and then the kids start getting sick and whatnot. So, bottom line is cheap food, beans and tortillas. I don't know about McDonald's in Mexico, but I can't argue with the fact that it's going up, but I think it's going up because McDonald's is going up.
I think a lot of McDonald's is quite the novelty around the world, and I mean I've seen how popular, just fiercely popular McDonald's chain is in, say, Eastern European countries, where it's relatively new over there, and obviously relatively new in Latin America. So I think it attracts kids, families, whatnot. It's cheap food, it's good food. They have a recipe that's repeated over and over again. So if you have McDonald's in Switzerland or McDonald's in Cape Town, it's going to be pretty similar. And I've had both, so I know where I speak. But the stock it's interesting because the price volume action is extraordinarily strong in this kind of market environment. So actually, I'm going to add this one to my watch list and see where it might be viable in the weeks ahead.
Yeah, I've been watching it for a while, but the volatility is just crazy. So some pretty wide intraday ranges. So I just kind of, maybe it'll settle down someday. Maybe it is a great long-term story. I'd probably like to see it tighten up in here, but you probably won't do that for me. Somebody pointed out, as we were talking about AG, and the reason it shows price action, it actually traded on the Toronto Exchange before as FR. I believe that's what we're getting an answer from JP. Thanks for that, JP.
Okay, that makes sense.
Let's see. Let's go through some other stocks real quick. Polaris. I don't know. That's a breakdown, and here's your first rally up above the 50-day. Short it, use the high the days or stop. Maybe. That could work. But that's usually what they'll do if they're late-stage failed bases, LSFB setups. Transaction tax at the G20 meeting in November, likelihood of passing for EU or US. I don't know. If they have a transaction tax for the markets, then maybe we're all out of business. Then my wife will be happy, then I'll have to retire and just sit on the beach. Maybe that'll be when we'll start a rock band, Dr. K. Anyways, I don't know. We don't really have any thoughts on that. If it happens, I think it reduces liquidity in the markets, and it's not a good thing. And when you reduce the ability of markets to generate capital for entrepreneurial emerging companies, I think that's not a good thing, particularly in the U.S. economy, where we rely on small business to provide most of the jobs growth. And that's been one of the reasons why our economy has been atrophying, because you don't have that basic component of entrepreneurial companies being able to hire. Somebody says, Dr. K, you say this is a weak bounce. So what would you need to see to tell you that this is a stronger bounce and that everybody should be getting long stocks here?
Well, I'd like to see another accumulation day. We got one yesterday, higher volume on the Nasdaq. So say we got a higher volume than yesterday on the Nasdaq, and the market and the Nasdaq finished in the top half of its trading range, accompanied by leading stocks like Apple and Amazon, Priceline. That would be confirmation that the buy signal is going to stay a buy signal for today, anyway.
Yeah. So, and the other thing is, here's why it's a weak bounce. You can see because the volume has been relatively weak on the buy side, but that's been the QE way. Markets just drift and there's no volume. And if you're a short seller trying to hit every weak volume rise, it's going to drive you batty, and you'll probably give up right at the peak. So it is a weak bounce, but it's the typical kind of bounce. But I think if you wait, you get a 50% retracement up in the 2600 level. If it's going to roll over, it's going to do it here, and I think maybe you go to the 50-day. But if you get some nice big upside move here and some get back above the 50-day, that could be constructive. So. Somebody says, I'm Puerto Rican and I live off of rice and beans. Bingo. Please comment on the MDM buy signal and there not being any stocks to go long on. It seems contradictory. My take on that right away is that that's not in a QE market. You've seen a lot of index rallies where you don't really have stocks in the best positions. Dr. K, your answer?
Yeah, I mean what you're looking at is the action of leading stocks such as Apple and Priceline, and I wouldn't be buying these here. But what you're seeing is, say, take a look at Priceline, for instance. Yesterday it went up on above average volume. It seems like it's forming out a double bottom of sorts. It's constructive. It's constructive action. It's not breaking down. And if you pull up Apple Computer, it's kind of a similar thing. I wouldn't be buying it here, but it is overall showing constructive price volume action. So I want to see that evidence of that in enough leading stocks, and that fortifies the buy signal on the model. But that doesn't mean that any of these leading stocks are in buying positions.
Right. So it's not necessarily contradictory, but I do think you get moves in indexes that occur, and we know historically whenever you're in a bear market, you can get a lot of great index rallies. And Dr. K's model historically would allow you to play some of those up legs actually for a period of time, and this may be one of them. And so today we're telling you we think you might take some profits or use a trailing stop of some sort and take advantage of it. So not really a contradiction. Somebody says, what is long term for you both? I've held stocks as long as 5 or 6 months, leading stocks, winning stocks. Now, sometimes I'll sell out of a position looking to buy back into it. If the stock has a big move, it'll base for a while, and then you can buy it when it breaks out again because it'll either violate the 50-day moving average or the 10-day if you're using the 7-week rule. So, that long term, I really think, when you're trying to break down, to me, long term is anything past, say, 3 months. Intermediate term is a month to 3 months, and short term is less than that probably. And then you can kind of twist it around into different lengths. Sometimes long term is a day, depending on what's actually going on in the market. For example, if you have a stock that drops 50% in one day and it's down 10% in the morning, and you sell out there, that was or you didn't sell out and you held, then you should have sold out earlier in the day. Therefore, your long term investing killed you. So in that case, long-term is long enough to kill you or to bring the run to an end in a violent way. So we just go with the moves until they don't go anymore. Right, Dr. K? What's long-term to you?
Yeah, I mean, I've had a few stocks over the years that I held for longer than a few months, say, 5, 6 months. Generally not longer than 5 or 6 months, simply because the market doesn't allow for it. If you look at 1995, that was the longest uptrend we've ever had, I think, in the history of the Nasdaq, and that went for about 8 months. So that was a year where you could buy and term it into a name and hold it out that long, because there were a couple names that did that. But in general practice, I find that my winning stocks I'm holding for maybe 3-4 months around that level. And short term, when stocks don't work out, I'm going to be selling them within a day or within a week's time. So those would be considered my short term holdings. I'm never buying, or I'm very rarely buying something with the idea of just flipping it. There are day traders and there's swing traders out there, and some of them are very good at what they do. That's generally not my objective. Once in a while, I will see an opportunity and I will take it, but the impetus behind what I do is always oriented toward long term, if the market will allow for it.
Here's this move on a weekly chart. You can see here's the move in 95. That was a great market. And I remember I bought C-Cube Microsystems in May here and sold it in October here. So, that wasn't really that long, but it was enough to make a lot of money. So, let's see, some more questions here. Get a couple before we wrap it up here. C-Trip. I don't know. This one's kind of funky here, but it's coming in the 200-day. Very volatile stock. Is it going to blow apart? Let's see. Let's look at the long-term chart. It's in this just long base here. I don't know. It's got some signs. Maybe you could short it here, use the high of the day as your stop, and hope that this is the time when it breaks completely down. You've had a number of downside volume spikes. This one finds support, though. This one, not really that much support. It tries to hold just below the 40-week line, the 200-day. Big selling here. So it's endured a lot of big selling. It hasn't broken down yet. Maybe it will. But not really on my target list. But maybe it's not, not the worst thing to short. I think it trades about 2.1 million shares, so it's thick enough. So, and if you're going to do it, this would be the position probably to short it using the high of the day as your stop. Let's see. Mayo packs for fries in Amsterdam. Really, they have mayo packs to use with French fries. I've actually seen that. There's a burger joint down here where they do give you French fries with it's almost like a tartar sauce. But all right, a couple more names here.
Chopsticks at McDonald's in London, actually, not anymore, but
really
years ago, yeah, I was coming with my parents to a McDonald's and he gave you a fortune cookie and chopsticks. Go figure that one.
Wow. Fusion IO, this thing's just needs to form a base one of these days, I think. This is what it looks like now. So you're just down several weeks. You're not really showing any tight action or any constructive support. It's going to take more time. I like the story. I was interviewed on MoneyGuysShow.com by Kate Stalter, who used to work for IBD. That was a few weeks ago, and it's one stock I'm keeping on. I like the story, but of course, technically, it's nothing there yet. I think the other one I mentioned at the time, and of course we always get questions about it, is LinkedIn. And LinkedIn is just building a base here. So this is going to take some time, we think, to set up. We like the story, but it's nowhere close to being set up. So that's really the issue with a lot of these. So Goog is coming up to the 50-day moving average here. It could be shortable. That's, again, there's a nice wedging rally right into the 50-day. So, yeah, you can come after that, use the high of the day, or use the 50-day as your stop, depending on how you want to handle it, The other thing to do on the short side, and, you ping things, and if they don't work, you stop out real quickly and maybe put them out, the next day or the next day. Maybe it takes 2 or 3 days for this to roll over. If you're shorting into the peak of the rally, if you think this is the peak of the rally on anything, so I'm just going to give you some final notes on short selling. It could go a little further, and you could be getting stuffed out. Now, the thing is, when it starts to break, that's where you want to be in. So a lot of times I think you have to be testing as they're rallying, and you come up, especially here with the NASDAQ hitting that 2,600 resistance level. That's definitely giving you kind of a double reference point, whereas you have the stock at the 50-day, you have the NASDAQ at the 2,600 resistance level. It may mean that your probability of these working right now is pretty good. So you can try it out. But if you've never done it before, I would say limit, 10, 15% of your capital to short selling, kind of get a feel for it. It's very difficult. You can see that even if you were successful, shorting one of these things, like let's look at Priceline, for example. This was a great, if you were shorting up in here, this was a nice profit very quickly here. But look at this rally, and so if you're late covering, if you try to be a pig and you've got an undercut here, and I think when you get to this point, that's pretty much your profit objective. It could go lower and approaches will be angry, but you can really get reamed on some of these, especially if it's a big stock like Priceline, So pick the weakest targets, and if you're short one of these big stocks and the market starts to turn and you got a logical undercut or bounce off a support level, you want to turn and cover and take your profits, especially in those types of stocks. But when they break, it can be very rewarding. Amazon did the same thing. It's having a similar type of move. Now, do you short this? I don't know. It's acting a little bit too strong. So it almost seems to me if it's going to break, it could break down again for the lows. But I would rather go after something that's much in a much weaker position within its pattern. So in this case, I like the way RAX is set up here, and I'm short it right now. We'll see if I stay short it going into the end of the day if it doesn't rally above this high. But we'll see. The next couple of days, it could drift higher. It really depends on what the market does. So you have to be very flexible, especially if you're trying to pick off inflection points. But you take a small position here, and you're not going to worry too much about 4, 5, 6% going against you. You can give it a little room and see what happens. Because when they do break, you do get a nice move. But still, very volatile environment. We don't know if QE3 is somewhere in the works. So you got to be careful. So, another example.
I found something on Hands news item. As we all know, that a few days ago there was some insider selling, and we got some questions on whether that's to be of concern. And we found generally it's not very predictive of the stock's performance going forward. But there is an article saying that there are sell signals due to insider trading patterns in Hands. So those sell signals may be the cause of today's high volume selling pressure. And again, I would ignore the insider selling information. I would just focus on the price volume action of what Hands is showing you right now. And what it's showing me is that, in a way, that if we get a mid-bar or stronger close on Hands, I wouldn't be at all concerned. If Hands closes at close to the low on the volume it's had today, then I would be concerned. And I would keep my sell. You could either sell toward the close if it closes near the low, or you could wait for it to undercut today's low at 81.72.
Somebody pointed out CR as another example of one. It's skidding past the 50-day. Here's a late-stage failed base, but this could be a left shoulder ahead. Now here's a right shoulder. Notice how the volume here. You've been wedging severely, but you can see that you got to figure when it gets up to the 50-day, or even here, the volume is so weak. You're thinking it could fail at the 65-day exponential. It could fail at the 50-day, but it doesn't. It just keeps skidding past, and it's light volume. And if you're trying to short it, it's it's messing with your head and ticking you off. But you'll catch it on one day. It'll start to roll over, and then you'll be in. So you got to be persistent. You have to be a maniac if you want to sell short. And I've had to go through some painful lessons, but I think last May was a good sign that we're able to figure it out. And what's going on here, I think Nasdaq at 2,600. We kind of see the market in a good position where it's logical for it to fail. So, anyways, on that note, that's all we got, you guys. I hope it's helpful to you. Any questions, further questions you have, feel free to shoot us an email, and we'll answer them as best we can. Remember, no individual stock advice. And the other thing is, we don't really have time to be commenting on stocks all day long, even if we could. It's just too much of a workload in terms of all the emails that we would end up answering. And of course, if you start answering a couple of questions, like, what do you think of XYZ? Should I be buying more? I bought more at this price and it's up. Should I buy more here? It's like that kind of thing. If you started doing it, then it would go off the charts. So we really can't do it on that basis. Aside from the fact that we operate on an SEC publishers exclusion, and on that basis, we can only provide discussions about the market to a group. So But feel free to send your questions. You know, the worst we can do is blank you, as Dr. Tate says. So, anyways, thanks everybody for listening, and we will catch you next time. Take care.
Take care, everybody.